When it comes to the three categories which you have mentioned, I think when it comes to the safe sparkler, I would like to go with HDFC Bank. I think the stock has been lying low for quite some time, consolidating in a range which is very unlike what it has done over the last 25 odd years, where it has been a great capital creator. And I really think that once these problems related to the merger with the HDFC get behind us, HDFC Bank should resume its journey northwards. I think the bank is still the one of the best managed banks here, and also the one of the largest in the private sector space. Penetration is amazing. You go to any remote corner of India today, you along with SBI, you get HDFC Bank presence in terms of ATMs and branches. The systems have always been very above board, and I think it's just a matter of time. So I think it's a great opportunity for investors to accumulate in this low phase stock, which has performed very well and will, I have no doubt, will perform very well going forward. So it can be a great capital creator. But for 1 year, I have a target of 1,700 rupees, which itself is a very good return from the current levels. But I really think it should be held for a longer period of time to really realize the full potential which this company and this stock has. The second category, which is the high risk category, I think the public sector generally and public sector bank space in particular has seen a huge turnaround. I think the given the credit growth and given the fact that they have the great space to grow, given that their balance sheets have got cleaned after many years, I think the scope is still not fully exploited. I think there is plenty of more upside in the very near future for these public sector banks, and if you're comfortable with the choppiness and some bit some nervous days which will happen on the way up, you could look at accumulating PNB. The stock has corrected somewhat from 80 odd, where it peaked a few weeks back. I think good time to accumulate. I personally think that the stock should reach 100 plus in about 6 months. So 100 is a target you can keep in mind, which itself is a very good return from here. And so, in kind of comfortable, the return is pretty high. So therefore, it kind of the risk with this is worth taking, because I think the risk is quite low. It's just the volatility which will kind of shake you a little bit. But if you're comfortable with that, kindly go ahead and buy. The third is the value pick, where I have IEX. I think the stock again, due to the change in regulation, corrected very strongly a few months back. If you look at it, I mean, I think yes, well, the regulation change did create a bit of a dent in its earnings and potential as a market maker in the power trading business. But I think the power trading business itself is going to grow very rapidly over the years. It has great potential. This company is still the market leader by a huge margin. So still has a commanding presence in a segment which is going to keep growing. Plus, they're adding other exchanges to it. They're looking at adding a few other products like commodities and other things which they're going to trade on their platforms. But otherwise, itself, the power trading platform itself is there's a very big advantage, with a very big first mover advantage which they have, and a very good technology platform which they have created, which will help them really create good value going forward. So this is the third pick. Here you can keep a 3 years time frame and 250 rupees as a target, which is almost double from the current levels.